Okay, so when you think about planning for retirement, what's the first thing that pops into your head? For most of us, it's the good old 401k, right? It's the workhorse. But with all the talk about market swings and inflation, a lot of people are starting to wonder, is that really the only game in town? Let's get into it. So let's ask that question directly. Is your 401k missing something? Could there be another piece to the puzzle? Maybe something tangible, something real that could add a different layer of security to your nest egg? That's exactly what we're going to unpack today. But hey, before we can really understand the alternative, we have to make sure we're all on the same page with a thing that's probably already in your benefits package. So let's start there. Look, the 401k is popular for a reason. It's super convenient, right? The money comes right out of your paycheck, it can lower your taxes for the year, and this is the best part. A lot of employers will even match your contributions. I mean, that's literally free money. But there's always a but. The trade-off is that you don't get to pick just anything. You're limited to a menu of investments that your employer chooses for you. You're not really in the driver's seat. Okay, so now let's pivot and look at a completely different path. This is one that puts you, the investor, squarely in control of an asset that's, well, a little more old school. So how is a gold IRA even possible? Well, it all happens through a special kind of account called a self-directed IRA, or SDIRA. And the name really says it all. You direct it. This opens up a whole world of investments that you just can't get in a normal 401k. Things like real estate, private companies, and yep, you guessed it, physical precious metals. And this isn't some obscure financial product either. We're talking about the Government Accountability Office reporting on these things. But the really critical part of their finding is the second half. With all that control comes a ton of responsibility. The GAO points out that when you have one of these, you're taking on what's called a fiduciary role. That's a fancy legal term that basically means the buck stops with you. You are legally on the hook for every single decision. Okay, so we've got the familiar set it and forget it 401k in one corner and the hands-on, you're in charge gold IRA in the other. So how do they really stack up when you put them side by side? This chart really lays it all out, doesn't it? On the 401k side, you see those much higher contribution limits, and of course, that awesome potential for an employer match. But then you look over at the gold IRA column, and what do you see? Total control over physical assets. That's the core trade-off right there. The 401k is largely managed for you, while the gold IRA is managed by you. It really just comes down to a choice, convenience or control. So why on earth would anyone pick an account with lower contribution limits and no chance of an employer match, all just to hold some shiny metal? Well, let's get into the main argument for why people do it. Here's the big idea in a nutshell. For centuries, people have seen gold as a safe haven asset. The thinking goes like this. When the stock market is tanking and all your paper assets are losing value, gold tends to hold steady or even go up. It's supposed to act as a kind of financial insurance, a way to balance things out when everything else is going haywire. And wow, this chart just shows that theory in action perfectly. Just look at this 10-year stretch. It was a brutal decade for the stock market, covering the dot-com bust and the 2008 financial crisis. As you can see, the S&P 500 actually ended the decade down 9%. But gold? It posted an incredible 332% return. This right here is the kind of historical performance that gets investors really interested in gold as a hedge. Okay, but, and this is a huge but, that kind of performance doesn't come for free. And it definitely doesn't come without some serious risks. Before anyone even thinks about a gold IRA, it is absolutely crucial to understand the costs, because they can be massive and they're often buried in the fine print. So what's with this number, 130%? Well, get this. According to a 2023 lawsuit from the SEC, that's how high the markup on gold coins from some dealers can get. Let that sink in for a second. That means you could pay more than double the actual market value of the gold you're buying. That extra money doesn't go into your account. It's just gone. Poof, right into the dealer's pocket. And that markup, or what they call the spread, that's just the tip of the iceberg. You've also got to pay annual fees to a custodian to manage the account. Then there are separate fees to the high security depository where the IRS says you have to store your metal. When you add it all up, especially with a high markup, it can be absolutely devastating. Someone investing $50,000 could see over $17,000 of it vaporized by fees in the very first year. And listen, this isn't just a hypothetical problem. This is a direct warning from the U.S. Commodity Futures Trading Commission. They point out that scammers specifically target people who are close to retirement because they know those folks are worried about protecting their life savings. They prey on that fear, promising safety and security while hiding the insane fees that can make it almost impossible to ever turn a profit. So, after all that, what's the most important thing to remember? It's not about deciding if gold is good or bad. It's about being a smart, informed investor. It's about knowing exactly what questions to ask to protect yourself from getting ripped off. So here they are. These are the 4 non-negotiable questions you have to ask. First, what is the spread or markup, and can I get that in writing? Second, give me a full, itemized breakdown of every single fee. Third, let me verify that your custodian and depository are legit and IRS approved. And finally, what's the exit strategy? How do I sell this stuff, and what's that going to cost me? A reputable company will have zero problem answering these questions clearly. And this brings us to what most mainstream financial advisors think. The idea of taking your entire 401k and dumping it all into gold is something almost no one recommends. Instead, they usually see precious metals as one small slice of a much bigger pie. Think 5 to 15% of your total portfolio, just enough to act as that insurance we were talking about, not as the whole plan itself. So at the end of the day, you have to weigh the two sides. Is a gold IRA a smart shield for your savings, a way to protect against chaos? Or is it a costly gamble filled with hidden fees and predatory salespeople? The right answer is really going to depend on how much homework you're willing to do. Now, if this has sparked your interest and you want to do a much deeper dive, there's a really helpful free gold IRA guide that gets into the weeds on a lot of these topics. We put a link to it for you down in the description. Thanks for joining me.